In today's video, I'm going to tell you exactly why Bitcoin currently looks weak and the real reason behind this market weakness that I don't see many people speaking about, but we definitely should be having this discussion today. I'm also going to run through why I think the bears are wrong. Even though you might look at this chart and instantly assume, well, the market is just reversed bearish again, I'm going to go through the nuance of why I actually think this could be setting the stage for the market to move in the other direction. So going to give you a full market update today to make sure you know everything that is going on at the moment. We're going to keep it short. We're going to keep it alpha packed, and let's get straight into things here. So firstly, I want to just do a little bit of charting and talk about where Bitcoin's currently sitting. In my last video, we discussed the fact that Bitcoin had flipped from a bearish trend on the noodle into a daily trend marked by a higher high. And I said this looks really good because it's finally for the first time confirming a reversal on Bitcoin. But just a few days later, we ended up having an impulse move to the downside. Now, if you remember what I said in that video, I said I would like to see a few days consolidating above $96,000 because that is the key pivot point in the chart. And I also highlighted the fact that for entries, you should probably be waiting for a dip to the downside. Now, if you move down the time frames, we never really consolidated to give us a solid entry. We moved into this pocket at 94. There was a small scalp long opportunity, but since then it's pretty much been down only. So there hasn't really been a strong opportunity to get on board the long trade unless you've been catching a knife. I thought that maybe at 90K, we would see a bit more of a reaction. But once again, we didn't even get an opportunity to enter there because price just shot straight through that level and is now looking like it's bearishly confirming against $90,000. So from a structural perspective, what am I seeing? Well, the first thing to establish is that 90K is a really significant level, and on the lower time frames, it's now marking overhead resistance. For Bitcoin to get back into this trend, this micro range, so to speak, it would need to get back above the $90,000 zone. It's also important to establish that it's not all doom and gloom. It doesn't mean we're going back down to the 81K low, which, by the way, I still think holds. I'm still going to stick by that opinion because if you do turn on the VRVP, you can see that the point of control is at 87.5K on the 4-hour. On the daily, this is a very, very heavily traded level. If you don't know what this means, the volume node on the VRVP suggests that the most trading volume in this entire range occurred at $87,500. So this is a very strong support until proven otherwise. If you can get a long down here, and this is certainly something I'm going to be considering because it does look like we're bearishly rejecting off the 90K zone, then I'd be very interested at adding at that zone at 87,500. Conversely, I'd be looking at longs at 90,000. I wouldn't be looking at shorts unless we traded below 87.5. There's definitely a short-term scalp short potentially from 88 to 87.5, but I mean, that's not really my game. That's a very low time frame scalp short. That's more Paradise's domain. I mean, he's been killing it in the Discord with his updates, as you can see. This is his analysis. If you want to pause the video and read further into it, he's clearly got that level identified as this series of lows on his chart as well. So that's more his domain. My domain will be looking for a swing long, a potential entry set up to get into a position. And typically when I open a long position on Bitcoin, which is typically like a lower leverage long or a spot long, what I will look for is the overall trend in the market, and then I will move down the time frames to get an entry. So I look at the daily trend, then I look at the 4-hourly trend, which is broken, and then I'll move down even further to actually get my entry onto, let's say, the hourly trend, which once again, this is just a downtrend. You know, you're seeing lower highs coming on the chart. We're probably going to see a lower low, potentially an equal low at the 87.5K zone. That is the zone where I become interested, and even then it depends on the reaction to that zone. So just running you through my framework of where I would look to get an entry. Overall, still looking for longs and not shorts on Bitcoin for a very specific reason, which I'll talk about later. But overall, objectively, the market has definitely softened. And I know like a few days ago I did a video and I said this was a really encouraging sign that the market had broken out, although I'd still like to see some technical triggers on the chart. I must say I have been disappointed by the weakness in the chart. It has been slightly weaker than I anticipated. I thought maybe we'd get a little bit more follow through at least, but that hasn't been the case. So as a trader and as someone that also manages their short-term or shorter time frame investments alongside long-term investments, we just have to pay attention to the chart and the signs that we are getting through the market reaction to news, which of course we need to unpack in today's video because there's been so much big news which is impacting the market right now. As I said in my Discord post this morning, your focus right now should be on trading the range extremities. Right now, we do have a range between 80K and 94 to 96K. You have this mid-range pivot at 90K, which I'm paying attention to, as well as the major support zone, which is the volume node at 87.5K. altcoin outliers. Just because the market is weak doesn't mean I'm not focusing on altcoins. Quite the opposite. I have a list which I've been flicking through every day in order to get entries. There's lots of interesting setups. Like one of my lists over here, for example, has a few interesting setups on ASTER. It's broken, but potentially a deviation reclaim play here would give me an entry to get on board. Hyperliquid's coming down to a major support zone. I'm really watching this and how price reacts. Canton is a token that I've been tracking recently. I want to see if I could potentially get an entry there. I've seen a few people are getting on board the LIDAR train once again, moving down the timeframes to 4 hourly. I want to see if we can flip this noodle, which has been capping price, and you also have this horizontal level to flip. KLED is really interesting. Fabian's been speaking about KLED. I think he had like a 2x overnight on KLED, which was a crazy call. That's now started to consolidate. If I were lucky enough to get an entry towards the range lows, I think this is a super solid mid-cap AI, small to mid-cap AI coin to hold in your portfolio. I don't hold any yet, but I'd like to add some. So you can see that there are tons of opportunities on the altcoin side. So just because the market is slow isn't really an excuse, in my opinion, to just totally check out. In fact, this is the time where you can really set your portfolio up, if you do believe in the thesis, which I'll be going through in today's video, to get some really nice entries. And that leads me to the next point, which is I'm also focused on how I can use these periods in the market to position my portfolio long term. And this isn't just crypto. This is also metals, which have obviously been exploding. This is also equities, which have been exploding, but have now seen a bit of a cool off due to some of the news we'll get into. Because the shorter term trends aren't that clear at the moment. When you are in a choppy environment, naturally you want to pivot into longer term positioning. Use chop as an excuse essentially to build your long-term positioning in the market. Our failure to maintain a sustained move in the market is kind of telling you everything you need to know about the current market conditions. So that is a quick update. But what's causing these conditions? Well, let's go through the current macro situation. There's basically a tariff war between Trump and the EU right now, which is affecting markets. And we've seen gold spiking, we've seen volatility in the bond market. You can see that the EU is preparing up to 93 billion euros in tariffs and other restrictions on US companies in response to President Trump's 10% tariff and demands for Greenland. So Trump is basically angling to get control over Greenland after he is trying to get control over Venezuela. His strategy has been, to summarize, a complex situation, essentially using tariffs as leverage to get what he wants, in this case Greenland. And obviously Europe hasn't taken this lightly. They've kind of kicked back with tariffs of their own. This sent markets spiraling lower over the weekend. Yesterday, Kabisi Leder posted this tweet. He said, this is unprecedented. If President Trump acquires Greenland and controls Venezuela, the US would gain 1.2 million square miles of land. This is 42% larger than the Louisiana Purchase, the largest US acquisition ever. So this is clearly the angle of Trump. It's kind of economic warfare in order to get what he wants here. In this case, it's Greenland and Venezuela. Although, there's also speculation he might go even further than that. When a reporter asked him, how far are you willing to go to acquire Greenland? This happened yesterday. He said, you'll find out. So clearly that has sent shockwaves through the market, and markets hate uncertainty. So that's why one of the big reasons why risk assets are down. So equities gapped down. You saw, precious metals are obviously up again. They've been on a really strong run. Metals absolutely love this environment because it's a debasement trade combined with mass global uncertainty. Theoretically, if Bitcoin were to act like digital gold, now is the time for it to do so. But there's one thing in particular which is holding it back, and we're going to unpack what that is today, because I think it's a really important dynamic to understand why Bitcoin has been lagging. But before we get into that, I think on the trade war, this is a very similar setup to what we've seen in the past from Trump with his tariff threats. And actually often, as you'll see by the end of what I'm about to read out, these end up producing opportunities, which is one of my factors behind the reasoning for looking for Bitcoin longs instead of shorts right now. So this is the playbook that Kabisi Leder wrote. That is his step-by-step playbook to navigating the trade war. On Friday, President Trump posts a cryptic message signaling tariffs on a specific country or sector. We obviously saw that last Friday. Markets drift lower as uncertainty rises. That's exactly what happened. This began on Friday when Trump threatened tariffs on Denmark. Secondly, later that day, or shortly after, in this case on Saturday, President Trump announces a large new tariff, often 25% plus. So it rhymes to similar threats that he's made in the past. 3, on Saturday and Sunday, President Trump repeatedly doubles down on the tariff threats to apply pressure whilst markets are closed, maximizing psychological impact. Over the weekend, the countries targeted by the new tariffs typically respond or publicly signal a willingness to negotiate. 5, On Saturday evening at 6 p.m. when futures reopen, stock market futures drop in an initial emotional reaction to tariff headlines. This happened. 6 on Monday and Tuesday. So this is yesterday and the day before. President Trump continues applying pressure publicly, but investors begin to recognize that the tariffs are not live yet and are still scheduled to take effect weeks later, such as February 1st. 7, and this is today, by Wednesday that same week, dip buyers step in. We are starting to see a reaction on Bitcoin already and on the S&P and the NASDAQ futures. So there is evidence this is starting to happen this time around, just like it happened in prior examples. Dip buyers step in and spark a relief rally, but this move often fades and leads to another push lower. So keep this in mind. That could potentially set up our entry for the 87.5 level, by the way, which I want to see where price reacts in that zone, because that could be a great level. With all the volatility in the chop right now, this actually could be a really good market to look into automated grid trading. I've actually got my own grid set up for this because, like, if the market's going to give us sweeps into key levels and then chop, you can basically print on the grids on the way up. So this is definitely something that I'll be covering soon. I've just been setting the parameters up myself, before I share it with you guys. So that is something that I'm working on, but that's a bit of a tip for you to look into. And to summarize number 7, this is typically where smart money begins buying. So if this is a path to follow, obviously history rhymes, it doesn't necessarily repeat towards the end of the week. So end of day today, tomorrow, and the day after, this could potentially be where there's an opportunity. On the following weekend, roughly 1 week later, President Trump posts that discussions are underway and that he's working towards a solution with leaders. We've already started to see murmurings of this. On Sunday evening of that weekend, futures open sharply higher as optimism returns, but gains fade into the Monday cash market open. 10 after the Monday open, senior administration officials such as Besant appear on live television to reassure investors and emphasize progress towards a deal. Over the next 2 to 4 weeks, various members of the Trump administration continue to tease progress towards a trade agreement. Number 12, a trade deal is announced. Markets make new highs. 13, to repeat from step 1. This was the playbook a few times that happened last year, but if it is going to echo a similar path. Obviously, it doesn't need to happen on the same day, but if this is a similar playbook, then you can assert that what is happening right now, the dip across the markets, are a buying opportunity. Now, how you get your execution is up to you. Whether it's pivoting off that 87.5 level like I'm looking at, whether it's waiting for a reclaim of 90K and looking to get in there, and obviously trading your, altcoins corresponding with that. If you're trading altcoins, that is completely up to you. But what I will say in general is that typically the taco trade has eventuated in markets going higher. And for that reason, my bias has to be on the long side just due to the historical pattern we've seen here versus assuming that the markets will continue tanking to the downside. Now, look, if we started, because you need technical invalidations for everything and fundamental invalidation. So if this starts to, differ and we see things getting even worse and Bitcoin reacts pretty negatively to 87.5, then I might start flipping my bias and saying, all right, there's definitely a chance we capitulate lower and have a bigger wick down to the bottom of the range. But that's not my initial bias. That's purely an invalidation. So keep that in mind. And of course, if that happens, I'll, be on the show here to give you guys a full update. We're already starting to see this play out in real time, by the way. I believe this was posted yesterday, that Trump agreed to meet various parties to discuss the Greenland situation. So we have started to see this playbook of tariffs being announced, market sell-off, talks begin, relief rally occurs, and then, when a deal is reached, markets are pushed to new highs. Just keep in mind, as Kabisi points out, what typically happens midweek is that there's a relief rally, then it fades before the big run with big buyers starting to step in. So there could be one more dip between 2 and 3 here. Just keep that in mind, and that could be a good spot for an entry. Gold is absolutely loving this environment, keeps making new highs. I said this in my Discord AMA yesterday. One of my big failures as an investor was not allocating more to gold. I was buying, I was accumulating slowly. I even called this wedge, by the way, that, eventually was going to break out. And I was buying along the way, but just not enough. Really not enough. And I think everyone's feeling it. And it's only made the pain worse as like a Bitcoin holder that maybe you're over allocated to the wrong gold. Maybe you're over allocated to the digital gold and not the precious metal, which is just going up and up and up and up. So I think a lot of the pain for crypto investors has been made worse, not just for losing money in terms of material amounts, but also losing money in terms of opportunity cost. Because gold and silver, they absolutely love environments like this as they're viewed to flight to safety assets. And it kind of begs the question, why is Bitcoin underperforming? I mean, if there was a time for it to prove itself as digital gold, it probably should be happening now. So I want to unpack some of these reasons because they're important things to understand in order to unpack where we currently sit as a market and how we move out of it. The first thing to look at, and you can kind of interpret this chart two ways, is that Bitcoin's control has changed hands. So you can see Crypto Quant quotes that market direction is now dictated by new whales. They hold the most realized capital, exhibit the highest turnover, and are the most emotionally and financially exposed to price volatility. So that's one way to look at it, that new whales are now controlling the market. But why is that the case? Is that because new whales are buying more? Well, yes, partly, but it's also because a lot of the OG whales have been selling off their Bitcoin. And this has put a lot of pressure on the market overall. And that has resulted in this discrepancy between old whales and new whales increasing. I think Ansem has an amazing post on this. He says, I choose to believe that the past year of underperformance of Bitcoin relative to gold is largely because of old holders with a cost basis of less than $100 cashing out in tandem with the 4-year cycle top timing and ends sometime in 2026. People with near 100% net worth in crypto reallocating as metals break out of decade-long consolidation and compression. That's kind of what I'm pointing to before. Like, a lot of people are now pivoting into metals. Like, I've been adding them as a separate part of my portfolio, but I'm not pivoting from Bitcoin into gold. But a lot of people genuinely are right now. Ansem says he believes that Bitcoin finds its place in portfolios with gold and silver exposure and benefits from large, high net worth individuals and institutions adding small positions. Bitcoin as digital analog to gold is easier to transport across global borders. These are the benefits, easier to transact with, and overall just a better asset in a heavily digital world. Think ZEC also continues to benefit, I agree, from this and trades closer to 1/10 of Bitcoin's value over the next few years. Technicals wise, don't think it trades beneath last cycle's price peak of 69K in 2021 and would be invalidated on bullish outlook if that were to happen, etc., etc. I think he just goes on to, make comparison to Bitcoin market cap to gold, etc. But I think this point at the beginning is very true. A lot of the old whales in tandem with the 4-year cycle ending cash out of Bitcoin. It put a lot of pressure on the market, and this is happening at a time where there is another major shift in the market, and that is this. So I think Ansem points to one side of the story, which I agree with, but there's another side of the story which is putting pressure on Bitcoin and limiting the institutional and high net worth individual investment, and that is the quantum risk. So this has been a narrative which has been around for years, but it's starting to become a genuine concern because we are getting closer and closer to quantum technology. I think this year we're going to see levels ahead in terms of quantum development, and then in the year after that and the year after that, it becomes a genuine threat because this stuff grows exponentially, especially with the amount of capital that's being invested in AI development. And then Nick Carter, who's really respected in the crypto and Bitcoin space, says Bitcoin's mysterious underperformance due to quantum is the only story that matters this year. The market is speaking, the devs aren't listening. And there's a post here wondering why Bitcoin is so badly underperforming gold. It's because of this. Financial advisors read this kind of research and keep client allocations low or at zero because quantum computing is an existential threat. It's going to be a yoke around Bitcoin's neck until this gets fixed. This is what he's referring to. Christopher Wood, global head of equity strategy at investment bank Jefferies, removed Bitcoin entirely from his greed and fear model portfolio, reallocating the 10% position into physical gold and gold mining equities. Wood cited rising concerns around quantum computing pose an existential risk to Bitcoin's long-term store of value thesis, even if near-term price impact appears limited. He cited a 2025 Chain Code Lab study estimating that 20 to 50% of circulating Bitcoin could be vulnerable to quantum-enabled key extraction. The shift marks a reversal for one of Bitcoin's earlier institutional advocates who originally added the asset as a digital alternative to gold. Now, if Christopher Wood is doing this, there are other players in the market who are now paying attention to this, and it's genuinely becoming a big narrative. McKenna, who's also respected in the space, came out and said, I've thought about the quantum threat for Bitcoin, and I think I've derived a few things. Quantum computing is advancing rapidly, and it's unclear what time frame this would cause real concern. The threat exists, and assuming any rate of advancement, Bitcoin will need to upgrade to post-quantum cryptography. The most important issue here is the perception of this risk, specifically to large asset managers, 100%, 110%. The main thing here is the perception. Whether or not it's coming in 5 years, 3 years, 10 years, 15 years, 20 years isn't what matters. It's the perception, and it's limiting allocation to Bitcoin, which otherwise should be performing like digital gold. It's not the only factor. What Ansem points out with a lot of the OG whales selling is definitely another factor, but this is something that's not being spoken about. Have seen some comments recently preferring analog store of values like precious metals versus their digital counterparts. Removing that quantum threat through updating the elliptical signature scheme and potentially hash functions would cement Bitcoin as a digital store of value akin to gold and market much higher. It's not only positive for the Bitcoin community to do this, but equally for institutional adoption. Ethereum's way ahead of the mark here, but unsure at this moment in time if it would drive ETH BTC higher. In summary, I am pro on upgrading Bitcoin Core to post-quantum proof elliptic curves. This is a decision to be made from the Bitcoin community. There's a lot of talk happening, and frankly, there's been a lot of complacency over the past few years. It definitely could occur. I'm going to be doing a breakdown, so make sure you subscribe to the channel on this full crisis and actually what's driving it, and some of the politics internally which are limiting it. Talks about a fork, the potential case for Zcash amongst all of this. All of this plays into the narrative that we are currently experiencing. But I think the quantum threat is something not enough people are talking about, and is definitely weighing on the minds of institutional investors. Another thing suppressing markets is liquidity as well. So yes, metals are exploding, but Bitcoin is typically more linked to risk assets, and liquidity has been restricted in the economy. I've done videos on this, and as you guys know, Bitcoin is heavily linked to ISM, global liquidity, which are all set to uptick over the next 6 to 12 months. So even in an environment like that, Bitcoin should be performing well. So it's hard for me to have like a negative bearish bias. The only reason I would have a negative bearish bias over an extended time period is if I was a proponent of the 4-year cycle, which I'm not. The other factors are positive for Bitcoin, but the quantum risk definitely remains. Although I don't think it's a huge risk for Bitcoin in the short term, it's definitely limiting gains due to investors not wanting to allocate. Another thing you can do, and I think this narrative is going to ramp up considering it's now starting to get, spoken about more on the timeline. Carter, McKenna, I'm doing a post on it soon. Like, there's a lot more people now starting to discuss it because the issue is getting bigger and bigger now that some of these headlines are coming out. Is just have a look through some of the altcoins that are building quantum resistant technology, because it's not only Bitcoin, it's the smart contract layer which also needs to improve. I know Ethereum has been moving towards this, but there are solutions, full stack solutions, which can be implemented to fix other blockchain protocols. So Zcash is one. It's not fully quantum resistant, but it's one more resistant protocol that you can look akin to Bitcoin. Some of the other solutions that I've been interested in is NAORIS. I hold a position in NAORIS, and it's been just consolidating for a while, so it's kind of given me a chance to add some more. Sitting at a 16 mil market cap. This is one I think you should look into in the quantum space, because they're building quantum resistant technology, and you can plug this technology into other blockchains, and this will also help other chains that want to migrate to a post-quantum world. Because if you're forecasting longer term, you have to look at, okay, who are the beneficiaries of this? Because there might be losers, and if Bitcoin doesn't pivot quickly, it could be a loser. I'm also looking at, okay, who are the beneficiaries of this trend, which is actually quite a long-term trend, and there aren't that many solid quantum computing protocols out there. Before this video, I did a full list, a full walk through the list, and the only two that I really like are Zcash and NAORIS. Nervous Network has been around for a while. It's worth looking into. Quantum resistant ledger, I don't know as much about. STRK obviously, has the privacy narrative as well. Alongside it, obviously those two things are interlinked, so it's interesting, but nothing compelled me to take a position at the 410 mil market cap. It's obviously balanced based on market cap as well. The lower the market cap, the more risk, the bigger returns. The higher the market cap, the less returns, but also the less risk. So you have to balance that out in terms of how you allocate. Obviously, I hold way more Zcash than anything else on this list, but I still think they're worth looking into. So that would be a bit of alpha for you. Another bit of alpha is, I think privacy is going to be a massive trend off the back of this. Not only privacy, but cybersecurity. Zcash obviously fits the bill as a privacy protocol, but I've also been researching some of the smaller caps to barbell my privacy positions, because I hold Zcash. I'm interested in Monero if it gave me an entry, but it hasn't yet. So I'm more so looking into some of the other players in the space. One that I came across the other day that I thought I'd mention today, because I also want to give you guys some things to look further into and research, because as I said, just because the market's slow doesn't mean there's not opportunities. There's still lots of interesting altcoins to research. I came across this protocol called Enigma. Realized they actually did a fair launch, and behind them they have Harris, who is part of the Marine Corps signals community. So basically working on security intelligence for the United States Marines. So he's the chief architect and co-founder of Enigma. So there's a lot of talent behind this one. I'll speak about it more in the future. I only recently took a small position, but I posted in my Discord the other day that people should look into this. I think this will be a big narrative. Cybersecurity, that's already, by the way, security is a massive narrative in equities. But I think privacy and security continue to come to the forefront of crypto now with the world we're entering into, which is a world of institutionalization in crypto. It's a world of the quantum threat. And I think it's really important as an investor, especially in a technology like blockchain, that you look forward into the future. What will be the needs of the future? And I think it's very clear that privacy is one of those needs. So that's why I'm actively looking into altcoin opportunities in that space as a proxy to get exposure. So if you guys have anything that you want me to look into, let me know in the comments below. That was the one that caught my eye, Enigma, over the past few days, and you should also do your research on it. And I'll try and bring on these shows, by the way, more kind of altcoin picks, suggestions, things to look into to you. Doesn't necessarily mean you should ape in. I'm not making like immediate short-term calls here. I am giving you some interesting stuff to look into that you previously might not have been aware of, because I'm trying to bring the alpha in these shows and, you know, share some of my research with you, and also help with what I posted in my Discord this morning, which is focusing on altcoin outliers, focusing on altcoin opportunities. Because even though the market's slow, there is plenty of opportunity. Even though that does, you know, that means you might not make money overnight. There are narratives here which are being slept on by the general public that when the markets turn, as we know, that can happen really quick in this space, you could be a beneficiary of that. So that's some of the stuff I'm looking into. That is my analysis on Bitcoin. Hope you enjoyed this video. I'm going to see you in the next one. Have a lovely rest of your day. And as usual, peace out.